So one relationship that you could look at is how Treasury yields affect certain markets, like real estate, like the Russell, like the banking industry. We can look at the Russell first. Not precise, not very precise, but you can see that over time, that typically when you see the Treasury yields on the 10-year specifically moving down, the Russell, the small cap stocks, typically move up. And when Treasury yields pop, that sends the Russell down. You can see the inverse relationship, down, up. Sometimes they move together, but for the most part, you can see it's kind of a, opposing situation. And the reason for that is when yields, specifically the 10-year Treasury yields, are higher, it makes it more expensive to borrow money. Loan percentages are higher. That makes companies that want to borrow very unhappy. So what companies want to, borrow? Well, ones that want to borrow are the small companies and the mid-sized companies that are not doing very well. I shouldn't say not doing very well. They're small to mid-sized companies that most of them have not shown a profit yet, so they borrow money. And that is the Russell 2000, otherwise known as IWM. So what you will notice is that when yields go up, algorithmically, traders have figured out that they should short and start selling off IWM. When yields start to reverse and come down, and that makes loans cheaper, yay, it makes investors here happier. They have a better chance of borrowing money at better rates, and so that algorithmically kicks up the Russell. One of the most major components in the Russell is KRE, which is the regional banks. And that's why the regional banks typically do, really well when rates come down, because it gives them an opportunity to loan more money. So that's one relationship that you could be looking at. The most important relationship between markets, this is a market. The Treasury yields, the yields are a market because it algorithmically affects stocks and indexes. The biggest market is the VIX. And the reason for that is because of its influence. So if I change this to the VIX, and then the big cap stocks is really what get affected more than anything. But I'll just use the SPY for now. Yes, very similar. I mean, look at this. That's pretty significant, isn't it? So it's very clear to see, when the VIX spikes and starts moving higher, it algorithmically triggers a sell-off in equities. When it hits support and the SPY is ready to make a move higher, all it needs is the VIX investors that hedged to take their hedges off and relax and not be so nervous, and then that gives the markets freedom to rally. You can see that big move in the VIX that we had over the last, 3 or 4 weeks before we started seeing a recent correction or rebound. This is what formulated and algorithmically triggered the correction in the SPY. So the SPY went down as the VIX goes up, because algorithmically, when price of the VIX hits these levels, it algorithmically triggers sell-offs in the SPY. Well, let's just say in equities. Mainly the VIX affects the big cap stocks and the big indexes. Not so much the Russell, but QQQ, Dow Jones, and SPY, VIX. So now that you see the VIX pulling off a little bit and getting below 20 and then below 18, you can see that's giving the markets cause to rip higher. No, all banks are affected. I'm just giving you like where the main concentration. So that's metals that we talked about. These are the Chinese stocks. So FXI, we're in it already. It's down a little bit. Interestingly enough, that it's already down, even though the dollar is not moving that much higher. So I'm not ready to double down on FXI, but I could be. You can see that this has been a big support level in the past, the 20, right? So if we break this and you take out this low, profit now, good opportunity to add to your trade.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.